Realtors, lawyers, dentists, small business owners. If you're self-employed by now, I'm sure that you know that the bank makes your American dream kind of feel like a financial nightmare. You're making money, but the banks think you're broke because of your efficient use of your tax returns. Well, I'm here to tell you today that I've got some solutions for you. I'm going to go through those here in just a couple of minutes. But if you've ever been turned down or never even applied because you think it's hopeless, please listen to this and at least consider changing your opinion. We've helped many people successfully buy homes that otherwise were already turned down or declined elsewhere. So let's go ahead and get into it. First off, it's not just that the banks are lazy, right? The banks are rigid. They have rules they have to follow. And frankly, reading tax returns is kind of hard. I'll bet there's some CPAs watching this that are probably going to be like, I fill out the tax return and I still wonder half the time why it's filled out that way. Well, so it took me probably as a mortgage lender. So I've been doing this for over 22 years, helping Utah families. And in that 22 years, the first 8 of them, I wasn't real comfortable reading tax returns. It took me about that long to reach that comfort level. And it still took me like another 3 or 4 until I realized that underwriters were the same. They didn't know how to read tax returns either. And so it took me about 4 more years to learn how to present tax returns. And that's half the battle right there. So remember in the United States, there's essentially 5 agencies, right? FHA, Fannie Mae, Freddie Mac, VA, and USDA. And those 5 agencies, they all look at tax returns in a pretty similar way for the most part. They have some pretty specific rules about them. But when they look at those tax returns, they just look at it face value and they kind of move on a lot of the time. They're not looking at adjusted gross income or anything else. But after spending a lot of time kind of understanding how to read them and recognizing that everybody's got really different scenarios, I am surprised at the variety in the tax returns that we get. But when I go through and find out kind of the story and I ask you about what's going on and help kind of figure out what's happening, we can actually present that and explain that to underwriters and present that along with the tax returns. And frequently we're being awarded income, if you will. They're being credited income for you that they weren't previously crediting. So that's a big part of it. And it's not that we're willing to lend. We close a lot of loans that a lot of other lenders have already turned down. And it's not that we're reckless. The reason that we're getting those loans is because we're specialists. I've always had a soft spot for self-employment. When somebody tells me they own their own business, I get pretty geeky about it. If we've ever had that conversation, you probably recognize that, or maybe got a little uncomfortable because suddenly I was like all up in your business. It's just fascinating to me. It's really exciting. It's kind of in my opinion, like the real American dream, right? You come to America, you want to work for yourself. So it's pretty cool. I guess it's the other American dream, but so yeah, that's a big part of it. Yeah, that's okay. So let's talk solutions. So number one, how do you read the paperwork? But okay, once you read the paperwork, there are definitely self-employed people. I'll read their paperwork, and first off, it's way complex. So getting to the point where we can actually submit a loan to an underwriter is going to take me several days. And sometimes people don't want to wait that long, particularly if you're doing well financially. People seem to want to just hurry up and get it done. And one of our biggest selling points is that we can close a loan in a week or two. And so that's a pretty good deal. And a lot of people really like that. So why not get out from underneath the microscope as fast as possible? So let me talk to you about a couple of solutions that we have. First off, so down payment and monthly or interest rates. What are we talking about? If I can get you a loan, what kind of down payment and interest rates are we kind of talking about, right? So first off, if I can actually read your paperwork and present it to an underwriter in a way that they're going to be able to read your paperwork, meaning your tax returns, then we're going with mainstream normal loans. We can go FHA, we can go Fannie Mae, Freddie Mac, whatever. So we're talking 3.5% down, 3% down, 5% down. It just kind of depends on the program, and obviously more if you want to. Even USDA and VA, which are both 0 down. Shout out to all the self-employed veterans in this country. So we can get you a VA loan, which is 100% financing and no down payment requirement, and right, we can actually show your paperwork properly, right? So that's if we can read and present your tax returns. And trust me when I want to emphasize that we can present your tax returns in a way that other banks have already tried to do and been told no. That's just a skill set that we've developed. Okay. That's because we're specialists. That's what we do. But if that's not you, if you've just been so efficient in your taxes, then we've got alternatives. So I'm going to talk about the alternatives in just 1 second. Before I do that, quick reference. So anybody listen to this that's self-employed, if you don't have a partnership with somebody like me, then start, right? Reach out to me. Let's connect. All of my clients, I tell them, send me your tax returns each year when you get them drafted, right? Before you file them with the taxes or with the IRS, go ahead and get the draft drawn up, figure out what it looks like, just the way that you want to, nothing crazy. But send me the draft and we will quickly go through and tell you. I'll give you a little Zoom video or something like that explaining what it means to getting financing. And so that way, if you want to make a change before you file it, you can do that. Okay. But let's say that tax returns, there is nothing, man. You're writing it all off. You're really, really efficient in that fashion. If that's the case, I have a second option called bank statements for income. Bank statements are amazing, guys. This is so great. I love this loan so much. It has solved so many dramatic experiences. People wanting to not have to pay any more taxes than necessary. And anyway, I get bank statements for somebody who might be showing under $50,000 a month on their a year on their bank statement, excuse me, on their tax return. I can look at their bank statements and sometimes give them credit for 20, 30, $40,000 a month of income. Honestly. And obviously it doesn't take rocket science. If you're making 40,000 bucks a month per the business bank statements, well, you're going to be able to qualify for most any house you want to look at, right? So that bank statement for income program, it does require a minimum of 10% down. And obviously the more down, well, not obviously, but 20% down, significantly better rate, and 30% down, and you're neck and neck with anything conforming at that point. So if you want to put that much down, you can. But going back to the 10% down, we've closed two of those loans just in the last couple months. 10% down bank statement loans, and both of their interest rates were in the low sevens. Okay, so yeah, I know low sevens aren't fives. I get that. And a lot of our conforming clients are paying extra and getting into the fives. Again, 10% down is the minimum. So if you want to do more, you want to do 20 down, you're going to be into the mid sixes. You want to do 30 down now, you're going to be able to probably touch into those fives. Okay, so that's just kind of a ballpark idea of what kind of down payment and what kind of interest rate you're looking at for bank statements for income. Bank statements for income are fun. I'm going to elaborate a little bit more. We typically work with business bank statements. So if yours are personal, that gets a little complicated. But if you're doing business bank statements, we're going to just right out of the gate, we're typically just going to start with a 50% expense factor. So if you're collecting 20,000 a month in deposits, we're going to count 10,000 a month as income. Okay, so it depends on your small business. Some businesses, of course, are collecting hundreds of thousands a month and paying hundreds of thousands a month, and so they're only walking away with a couple, $10,000, $20,000 of income. Some businesses have exceptions to this, but the majority of the businesses come in the door and we're going to count 50% just right off the top, and we don't have to do anything further. It's just the way it is. If 50% is like you have a small office, maybe you're a financial business or something like that, or just something where it's super low cost, working from home or whatever. In a case like that, we're oftentimes able to get a letter from their CPA, your CPA, that would actually help us figure out what the true expense is. And if we do the true expense, now we're potentially able to count up to 80% or even potentially 90% of those business deposits. Okay. And that'll be your income that we use for qualifying for whatever house you can buy. Okay. So a big deal on that. If that doesn't work, right? If we can't, that's just not showing enough income. We still have, so first way, I'm going to try to read your taxes. Second way, we're going to do bank statements for income. Third way, if this doesn't work, we have two loans, one for investment properties and one for primary residence or second homes. Both of these two require 20% down minimum, and both of these two have no income documentation. I will not pull tax returns. I will not pull bank statements for income. We can use bank statements for assets, but not for income. We're just going to look at, we're literally not going to disclose your personal income history. On the investment property one, we're going to look at the income for the property specifically. So that one's what's called a DSCR. It's probably the worst named loan product that we have, debt service coverage ratio. It's a cash flow analysis. That's what it is of the property. So that one's 20% down. We're looking at the fact that you have the 20% down and the needed reserves after that. We're looking at your credit score, and then we're looking at the cash flow of the property. And the cash flow of property has a lot to do with the interest rate that you get. And then the other one, that's for primary residence, second home kind of thing. That one, we're literally just not documenting income. So we're pretty much hyper focused on assets and credit score. And so as long as you've got good credit, decent, pretty good, decent credit. The rates for this last one are actually fairly high. They're in the eights, maybe even high eights, depending. But hello, look at what we're not documenting, right? 20% down minimum. If you put 30% down, it does improve the interest rates a little bit. On the DSCR, that one, which where we're documenting the cash flow, that one's been awesome. We've actually quoted quite a few people in the mid and low sixes, and that's for an investment property with no income documentation other than the house cash flow itself. So those are kind of our three main solutions for self-employed that are getting beat up with the self-employment tax for your mortgage, if you will. So if you've been running up against a brick wall for that, you're welcome. Give us a call, reach out. A couple, I guess, final thoughts to consider as you have finished watching this. If you have a contractor, a realtor, or dentist friend, or somebody who's really been, they've been told no multiple times or have no hope in my mortgage industry, they've been told that no by the big banks or whatever, tag them. Share this with them. Have them reach out. We've totally got their back. Um, I guess I would also love to know kind of who's listening to this. Like, and maybe throw in the comments that your industry that you're working in. What kind of self-employed individual are you? If you're, are you a contractor? Are you financial 1099? Are you, what are you? You should drop a comment and just tell us what industry you work in, and then we can kind of dive into what it's, which one of these solutions is most likely going to work best for you. So don't let messy tax returns stop you. Don't let previous no's, stop you. I'm a mortgage broker. I shop around for you. We have a lot of options. We got a lot of flexibility. It's the beauty of being a broker. So reach out today. Let us know how we can help. And if you didn't know any of this, hopefully that was interesting. Um, yeah, man, we just got some great solutions. This is part of why I like my job so much because frankly, if I mean we know this, right? The self-employed people of our the small business owners of the United States, they're kind of like the lifeblood of our country, and half the time they can't even get a mortgage. What's up with that? So now they can. Give me a call. We got you. You have a great rest of your day. We'll talk to you another time.